Hey everybody, and welcome into another Monday market update. Glad you're with me today, and I just want to kind of give you another, hey, what's been happening over the past week? A lot to get into. I got my note sheet here. So, all right, here's the thing. We kind of got into this situation now with pricing, with inventory. We kind of been here, but things are starting to change a little bit more. Inventory is going up on the market, a little less people going under contract. So we're seeing houses sit a little bit longer. So now we're kind of in that place of, okay, which is going to happen? Are we going to go like rates going to drop first or price is going to drop first? Rates are still high. They're still in the mid to upper sixes. Nobody really expected them to stay here, I don't think, for as long as they have. So now we're just kind of in that situation. Like, are we going to see rates drop? And that's going to push buyers into the market so we can see more inventory moving. Or are we going to see sellers start to have to drop their prices to move their inventory? Sort of the chicken and the egg, which is going to happen first. And honestly, I have no clue. I mean, I think prices will drop in the short term before rates start to drop again. But at least the debt limit deal was reached. And so we no longer have that looming disaster over our economy right now, which is good. And then the jobs numbers came out. And when the jobs numbers came out, it blew everybody away. We were like, wait, we only were supposed to get 190,000 jobs. We added 340,000. That's great. That means there's way more people that have jobs that'll be spending money and boosting the economy, right? Or is that bad because now we have higher possibility for inflation and now the Fed's going to keep raising rates again? Again, we have no clue. Like it's all a mystery, but there's all this mixed signals going out in the economy right now. So again, like I said, more volatility coming. We don't know what's happening, but it's why I've always said the best time to buy or sell a house is when you yourself need to do so. You can't worry about the rates. You can't worry about the inventory. If your situation calls for you to buy or sell, then that's what you have to do. You can always refinance. If rates drop in the next year, you buy the house now, refinance. Guess what? You now own the asset though. So you're not having to compete anymore with other people for that asset. And since we know inventory is low, we know new home construction is lower, and it's not matching demand, I think that's a good thing. Owning the asset is going to be good for your future. So make sure you're paying attention to what you need to do. Don't worry about the economy. Don't worry about what's going on. Do what is best for you in your specific situation. If you've been renting for a while and you expect rates to go down, right, and you're not wanting to buy yet, or you're still out there thinking, okay, well, when the perfect home comes along, I'll jump on it. Guess what? You're still paying 100% interest rate. All of your payment is going to pay your landlord. You're not owning or building any equity in that home or in that apartment or wherever that you're staying. So you got to think through that. Okay. What is best for my situation? It may be a great time for you to buy right now. However, it also might not be a great time for you to buy right now. It's strictly up to what's going on in your life. As far as the numbers for May, I thought we'd have them today. They haven't come out yet, so I'm not sure exactly where prices are compared to last year. I have a feeling they're flat. They're pretty much exactly where we were. So I don't really think prices jumped any from May last year to May this year. But we'll have full detailed numbers for you next week on our Monday market update. But here's where I wanted to end for today. This is a unique trend that we're seeing right now, and I don't know if it's going to remain this way or I'm hoping it will change. But what we're seeing is that typically you have the 10-year Treasury note, and mortgage rates follow that 10-year Treasury note. And if that 10-year Treasury note is, say, 3%, then usually your mortgage rate will be about 150 to 200 basis points. So that's 1.5% to 2% higher than that 10-year Treasury note. So right now, the 10-year Treasury note's around 3.6. So typically you would expect to see a rate between 5.1 and 5.6%. But instead, it's 6.6% to 6. You have 350. I mean, it's like almost double. It is double. It's insane right now. It's so crazy. It's like 300 to 350 basis points higher than the 10-year Treasury note. So that is hurting and harming the affordability of homes in our country right now. If the mortgage interest rates were the same spread, 150 to 200 basis points, as historically has happened, as literally what was happening just 2 years ago when rates were going crazy low, everybody was buying 200 basis points spread. Now 350. So why are rates not dropping? Why is there? Because there's so much volatility in the marketplace. There's all these issues with banks. Mortgage-backed securities, or the Fed is not buying them anymore. They put a halt on that, right? So there's less demand, so rates are going up, right? So anyway, I find that really interesting to see that we're basically experiencing the affordability crisis with housing right now as a result directly of the spread between the 10-year Treasury note and mortgage rates. And so as that spread continues to stay elevated at 300 to 350 basis points, affordability will remain a crisis for housing. But if we could just get that back down to like even 200 or 250, now you're talking about a rate that's between 5.5% and 6%. And that difference is crazy. So if you were to do that with a $400,000 home and you're putting 10% down, your payment from a 5.5% to 6.5%, your payment would be a difference of like $160 a month. That's just in the interest rate. $160 less a month. So is there an affordability issue? Absolutely. Are we going to see that moving forward? I hope not, but I don't know until the economy shows some stability and we get rid of all this up and down, up and down, up and down. I don't know that we're going to see that. And that's why I've been telling people, I think we're in a new normal. I think the market we're experiencing right now, with a little exception, is going to remain this way for the next 5 to 7 years. I know it's bold, but what that means is that, as I said earlier, when it's your turn to sell, when it's your time to buy, and it's right for you, that's when you got to pull the trigger. Okay, so just think through that, process that, prepare yourself for that, and then when it's time to go, hey, go out there, talk to your realtor, call me, and we'll help you through the process. But that's it for today. That's all my Monday market update. Hope you guys have a great week, and we'll hopefully have some May numbers to talk about next week. See you later.